Hello, everyone. Jeffrey Beamer here, Senior Investment Strategist with EWO Trading. Today, we're looking at our pro trader tip of the day. We're taking a look at trade ID 1049, and this was done within our service, Delta Neutral Income trading service. And this is where we look to capture theta decay, time decay with options, utilizing various strategies. And one strategy that we do is we use earnings as a catalyst, and we sell options going into that earnings event to capture the high implied volatility. So as we take a little closer look at the trade here, this trade opened up on March 14th. All right, and we sent this alert out to our subscribers, and I'll pull up the image here of modeling the trade. Okay, so the stock, as you can see, was trading in a range, and the lower break even is identified by this light blue line, horizontal line here, and the upper break even in the trade is the higher light blue line here. Over to the right is the risk graph, as we call it, and the risk is identified as anything really above or below those break evens. So we need the stock to stay in the middle, and that is our profit zone. Now you can see, even in this image, the last earnings had this little gap down, but the stock would have stayed within these break evens. So this stock is a consistent winner when we do these sorts of strategies. This strategy happens to be an iron condor. And again, we sold premium. Well, we sold the iron condor going into the earnings event. So the process then was just to wait a few days until the earnings event and then to exit the trade. And we have the expectation of a winner. So what happened with this trade? Well, the theme here is really going to be having patience with your trade and then making sure your prognosis, you stick to your trading plan. So what happened on the alert, on the earnings date, is the stock actually gapped up really big. So I put out this comment on that date saying, watch out. We're watching this really closely. And I put out this chart, and you can see that the stock gapped up really hard on the opening. So you're looking at Heiken-Ishii candles on a 3-minute basis here. And all of a sudden, within literally a couple of minutes after opening, the first red candle appeared. And that's when I put out the alert saying, hey, I'm seeing selling pressure on this. We are going to watch this closely. Now, the trade right now was way upside down. In fact, we had lost approximately 50% of our risk in the trade. Okay. And so you can see that in the image up here on the right-hand side. You can see there was this little dip down to where it says a negative 52%. But then also you can see kind of the end result. And what had transpired here on the end result is that the stock sold off on that entire day, traded lower. So as it's trading lower then and getting down towards our upper break even, we can breathe a sigh of relief saying, okay, now it's getting back to where we have some normal expectation of a move. So we waited one day and we exited on this day, the next day, which was the 21st, at a very small profit. Okay. Now the ultimate profit happened to be $10, okay, or a 10% return. So it was $44 overall. So we did not capture anywhere near our maximum reward. If I go back to the original image, we took in, if you see here, we took in $1.64 or $164 because we sold the iron condor 2 times at 82 cents. That's $164. And we were basing this trade on a hypothetical $10,000 trading account. So our max risk in the trade was $436, which is a 4.36% risk to portfolio. And again, we were challenged on that upper break even, and we had a big loss. But watching the chart, being patient, sticking with our trading plan, we were able to wait until the next day. The stock continued to sell off the following day. and we were able to get out at a break even or even a small profit. And on this particular trade, we were able to generate just a small profit, enough to cover commissions plus a few dollars more. So in the end, to summarize this, really it's being patient with your trades, knowing where your risk is, knowing what your max risk is, and can your portfolio absorb that max risk. And for us, max risk was only 4.4%, and we were down only 2.5% to portfolio when the stock gapped up. That allowed us to stay within the trade, and we were able to then close it, as I mentioned, for close to break even or even a little profit, and we squeezed a little profit out of the trade. So that's your pro trader tip for today. I hope you enjoyed this session. Come back next week. We got another one for you. Take care.